Welcome, everybody. Great to have you all here today. Thanks for tuning in. What we're running through here is just some hot topics on financial management with the view to saving you a couple of pounds going ahead into 2023. So the information we cover in this webinar is not to be relied upon as tax or legal advice. Be sure to run this through by your own accountants or reach out to myself and Raj here if you want to dig deeper into it. We'd be happy to offer guidance on a more personal scale. So to give a quick intro, my name is Jonathan. I'm working with the House Pro team in the product marketing division. And what we've done is we've teamed up with Raj from Rivers Accountancy, who is a member of the Institute of Chartered Accountants of England and Wales. And, we've been talking over the last couple of weeks and months and just some ways to give you guys some tips and advice on tax as we go into the new year. So thanks for being here with us, Raj.
No problems, Jonathan.
Perfect. So for the first installment of this three-part webinar series, we're just going to be running through managing taxes, expenses, and claims. So I'll be quiet now, and what I'll do is we'll hand you guys over to the expert, Raj from Rivers Accountancy. So Raj, great to have you. Take it away.
Thanks, Jonathan. Thanks for having me. Hi, guys. Hope you're having a great year so far. What I wanted to do was just cover off some of the expenses and benefits that you can claim through your company, and also if you're self-employed, although some of the rules change slightly, but they should be relevant to both. So the first topic to cover off is travel and subsistence. So for example, I think a lot of people now are based at home for their work purposes. So any travel from your home or your office to see a client, a supplier, House Pro trade show would be fully tax deductible. So that would be the cost of a cab, cost of a train fare, cost of a bus fare. If you're taking your personal car, you'd work out the mileage. So that would be 45p per mile. So if you've done 100 miles, you would reclaim back £45 from the company. It also covers subsistence, means basically your food-wise. So if you grab a sandwich while you're out, teas, coffees, that kind of thing, to keep you going as you're out at these events to see clients and anything along those lines.
Nice. And I suppose, is it best to have a separate personal credit card versus a company credit card to just make that a little bit easier?
Yeah, that's one of the key things we see is start off when people go into business, and even later is if they use a personal card, they actually forget that they've used it for business and just think of it that they've used it personally. And having that company card and using that company card and then keeping the receipt, reclaim the VAT, is very important because it's an easy way of keeping track of your expenses, what you spend, and making sure that you maximize your claims against reducing your profits and saving on corporation tax. So that's a very good tip there.
Nice. And then we've got work from home. So I know a lot of people are working from home these days, obviously.
Yeah, obviously, the last couple of years has changed the dynamic. So HMRC have a £6 per week work from home allowance. So it's a flat rate allowance that you can say every week that you work from home, or every day counts as a week. You would take that £6 multiplied by the weeks that you worked at home and reclaim that back from the company, and it would be an allowable tax deduction. Another way of doing it, obviously, we're in times where a lot of prices are going up, gas, electricity. That £6 might actually not be enough to actually fully cover the cost. So the other way we do it is we have a spreadsheet where you put in your home costs, and then you portion out what percentage is your home office, a sixth of your home, and your total household expenses, £2,000, £3,000. You would take a sixth of that £3,000 and claim that back from the company.
Nice. And I suppose where that can be applicable, a lot of the people that, I speak to, maybe their wife or their significant other is managing expenses or managing the kind of the day-to-day running of the business. So, that's where the home office might be very applicable there for some construction companies or interior design companies as well.
Definitely.
Then I suppose the next point, one of my favorites would be equipment. How do I buy the best equipment?
Buy the best equipment. So anything that's relevant for your trade, for example, hammers or drill bits or computers, MacBooks, cameras, anything for example designers, anything that's relevant to what you do and is equipment that you need to carry out your trade. you can now deduct through the business. So previously you would buy these equipment. So for example, this laptop, because you could use it over a number of years, you wouldn't be able to expense it straight away. You would get capital allowances. The government have brought in a new scheme called the annual investment allowance, where basically up to £1 million, you can deduct 100% of those costs through your business in the first year. And up until the tax year ending in the 5th of April 2023. So hopefully you've got a little bit of time to make these purchases. Any new purchases that you make will get a 130% deduction. So if this laptop costs £1,000, you would be able to reduce it. Under the old scheme, you'd reduce your profits by £1,000. But with the enhanced annual allowance, you would be able to deduct your profits by £1,300. So you get that £300 extra to deduct off your profits.
That's great.
Cool. Then next line is vehicles. So at the moment, if you buy a petrol or diesel vehicle through the business, these are taxed very heavily and not encouraged by most accountants, just because of the way they're taxed both on the company and the individual is very tax inefficient. However, the government are pushing electric cars, so there are significant benefits of still up until a couple of years' time where these benefit in kinds rates might change. And there's still benefits of buying an electric car, such as a Tesla, through your business. So if you buy an electric car, you can deduct the full amount against your profits. If you lease it, you can deduct the lease payments against your profits, and your benefit in kind rates are significantly lower than they would be for a normal car. So for example, a Tesla Model 3 would have a benefit kind percent of 2%, and you would be able to deduct 100% of the cost, whereas an equivalent, say, C-Class Mercedes would have a benefit in kind tax of 30%. So that's what the individual and the company pays, and you would only be able to deduct 6% of the cost of that car as opposed to 100% of the cost of the car. So you can see there's massive benefit there currently of taking those vehicles through businesses, and that's to encourage take-up of electric cars.
Great, definitely worth keeping in mind because there's a significant tax saving on it.
Yeah, and the other side of it is if you are doing a trade or a heavy trade through the business, you can look at putting commercial vehicle through the business. So these can be things from pickup trucks to transit vans, things that are used for, the economic benefit of the country, which is why the government really helps promote these acquisitions, because they will, in theory, help the economic activity of the country. So here you can reclaim all of the VAT on purchases. There's a more beneficial benefit in kind tax percentage, so it's on a lower amount. And also, there's benefits on claiming fuels and lower benefit in kind taxes and the deductions that you can claim back from HMRC. But again, these are all things where I would definitely take advice professional just to make sure that it fits your circumstances and the rules haven't changed. And what people are claiming to be a commercial vehicle is because you have to have a 1 ton payload, which is the difference between the curb weight and the weight of the car. So I've heard of a few people come foul by a few kilograms of the tax rate.
Very important to get that right. We'll be eating extra mince pies for Christmas, making sure we hit the weight.
Yeah.
And then the staff and entertainment, that seems like it's a popular one to get done.
Yeah, everyone wants to keep their employees happy. So HMRC allow each staff member and their partner to count as a couple. So if you've got 10 staff members, you can have up to 20 people at an event. And for each person, it's £150 per head, including that. So you can have that as one massive party at the end of the year, typically Christmas too. Or you could split it over 2 or 3 or a few, however many events you want, as long as it fits within that £150 per that category. So some people do some barbecue and a Christmas too. Perfect.
It's great. And then last but not least, your pension.
Yeah, so pensions is a good one, especially for owner directors. So you can make pension contributions to your pension and they would be fully tax deductible. So it's a good way of topping up your savings for the future, as well as if you have the excess profits to try and reduce them down before paying corporation tax on them.
Very nice. Yeah, and I think that covers us off for this portion of the webinar series. So yeah, that was just a kind of an overview of how you can be more tax efficient and how you can claim things off the HRMC. So if you do have any more specific questions, obviously reach out to either myself or to Raj from Rivers Accountancy. I'll be happy to go into more depth on it with you. But, the more you can save money going into the next year, the more money you'll have to, put back towards the business, to give yourself a little bit of extra cushion. So definitely any hints and tips are greatly appreciated, and definitely reach out to either myself or Raj, and happy to dive into it a bit more with you guys. Lots of resources on the house.co.uk learn website. And look, thanks for tuning in today. There's another 2 episodes to come, so we hope to see you next week. Thanks, guys.